Okay, I think it's a good time to get started. We're streaming live on YouTube, so anyone on YouTube, if you have any questions, please do put them in the chat and we'll make sure we're answering them as we go along. And I'll make sure that I add anyone in as we go. But thank you everyone for joining us today. Before we get started, as I've already sort of said, a little bit of housekeeping. If you're not speaking, if you could just make sure that you're on mute. Feel free to keep your cameras off. You're welcome to come on camera as well, though. If any questions come up as we go along, please do pop them in the chat. Ella will be monitoring the chat for you, and we're going to come back to them at the end. So, for anyone who doesn't know me, I am Lucy. I am a qualified multi-award winning accountant. Um, and I'm the director of Simplex Accounting. So our goal at Simplex is to simplify finances and build confidence for UK business owners. Um, so today we're joined by Tom from Broadbench, and together we're going to talk about how directors can reduce tax and ultimately protect their income. This session came about because we see so many directors going through, doing the right thing tax wise, but they're not always realizing how exposed they can be if they can't work. So, this webinar is for general information rather than personal advice, but the aim is that you leave knowing what to check and what questions to ask. I'll cover the tax side and mix in different types of pay. And Tom here from Broadbench is going to take you through the protection side of things. So I'm going to hand over to you, Tom, to introduce yourself, tell us a little bit about yourself, what you do, and yeah, we'll go from there.
Thank you very much, Lucy. Hello, everybody. My name is Tom Hitchcock. I'm the director and owner of Broadbench. We are a financial services company that specialise in advice for directors, business owners, contractors. We've been doing this now for 15 years as of this month. So this is our 15th year anniversary of business. For me, it's been a process of learning, helping, advising, growing, doing our very, very best to help people make informed decisions. And in terms of the advice we give, we're directly authorised by the Financial Conduct Authority, something we're very proud to have. And we've been a business which has grown organically, no investment outside of just hard work and putting in time and effort to really grow the business to what it is today. We are very proud of our 5-star reviews on Trustpilot and endeavour to go the extra mile to provide fantastic advice, great customer service, and make sure that we're the go-to when it comes to this area of expertise. It's a very tricky area because most people simply don't know about some of the tax benefits available to them as directors and business owners. And I think we're here today to demystify a little about how this can be structured, what it means for you, what you can save in terms of tax, personal income, and ultimately protect your interests, your family, your business, yourself, your income, your wealth. So today, I hope that we'll be able to leave you in a far better position in terms of your understanding. And in the event you do want to learn more, we're on hand to help. So Lucy, back to you, and let's get cracking with some of the questions we've got.
Yeah, let's get into it. So before we actually get into it, let's do a very quick poll so that we can get a feel for who is in the room. So poll has popped up on your screen now. How do you usually take money out of your business? So just click the first option that fits best. And if you're not sure, that's completely fine. Oh, I can see them coming through. Yeah, keep them coming, people.
I'm glad to see no one's put honestly not sure.
That is always a good start. Always a good start. But there's no judgment here.
No, of course not.
I love it. Okay, I will give you just a few more seconds to answer that for anyone who hasn't. Okay, I'm going to share the result with you all. So 40% of you said you take the money out by dividends, and 60% said a mixture of both. So yeah, Really interesting, actually. It explains a little bit about why we're talking about this topic, why it's relevant for directors. So, diving straight in, Tom, when do directors usually realize that they need income protection?
It's one of those things that when you set up your business, you're often moving from a position of being employed to going self-employed. Not always. Some people do genuinely kind of get into setting up their own company, but a lot of the time you'll have worked for an organization, learnt the ropes, and maybe decided that you can go off and do it yourself. And when you leave that employed role, you often forfeit a number of comforts which come with that position, i.e., someone paying your salary every month, someone giving you a form of healthcare, maybe a death and service benefit,
Yeah,
potentially critical illness insurance. And when you incorporate and set up your limited company, it's on you to create financial safety nets. It's on you to ensure you're adequately protected with your insurance. And the tricky thing with that is that it's very difficult to understand what comes first in terms of priorities. And ultimately, when you begin your business, certainly from my perspective, when I started Broadbench, it was a case of what can I do to just kind of get myself going, get the basics sorted. And it doesn't necessarily cross your mind. And additionally, you're not always familiar with the sort of opportunity to expense certain items through your company and not pay for it personally. So it is, I tend to find something whereby people are informed potentially by their accountants, not all the time. I actually speak to a lot of accountants who have no idea that they can look to expense certain items through their companies. And often people come to me saying, look, I've heard this is something I can do. Can you explain a little bit further? So from experience, it doesn't happen initially because you've got, I guess, bigger issues to deal with. Let's get my business going. Let's get paid some money. Let's get my feet under the table. But ultimately, it does come at a later date, as and when you grow and mature, and you think to yourself, right, I've got problems with taxation. How can I lower my personal income tax? How can I lower my corporation tax? How can I safeguard my family's welfare? How can I safeguard my financial welfare? And at that time, it's where we're able to come and step in and say, look, these are some ideas I can share with you, and let's help you put them in place if it does resonate.
I love that. So, what happens financially for a director if they can't work for, say, 2, 3 months?
Well, typically, it depends what type of business you have, but from experience, majority of companies tend to have an ample amount of savings in their business. Now, there's two schools of thought with this in terms of, do I have enough money in my business to support me for a period of absence from work? And if that runs out, do I also have enough savings in my personal bank account to sort me out as well? Now,
Yeah.
the interesting thing is it takes quite a bit of time for you to accumulate savings in both your business and your personal bank account because you've got to pay tax, you've got the monthly cost of running your company, and ultimately, should it be your responsibility to pay for absences in work due to poor health when you are the most important and valuable asset within your company? If you think about it, whenever you work for somebody else, that organization will typically look to pay you sick pay and look after you as a valued member of the team. But when you go self-employed, that onus flips to you, and a lot of people simply don't think about that contingency plan.
No,
So
they don't think about themselves, I
no,
guess.
I know, and it's the thing which often your most valuable asset, your health, everything emanates from that. And sadly, most people take that for granted until it's too late. So what we're here to do is to kind of say, look, don't leave it to the last minute. Don't kind of get backed into a position whereby your health's failed you and you're having to make tricky decisions. Get your company to put a safety net in place, which is tax efficient, protects you, your business, your income, your savings, and don't worry about it. It's something which, as I said, we all take for granted until it's suddenly not there. And ideally speaking, you can put this in place with a very tax efficient method, which solves all these problems for you before they've even encountered them.
So, who do you think is most exposed? Do you think it's the salary only directors, or do you think it's the dividend heavy directors, and why?
It's anybody who runs a company, irrespective of how you pay yourself. Remuneration is is an individual choice. Whether I decide to take salary for certain reasons, whether I decide to take dividends for certain reasons, that's entirely up to your own personal circumstances. From experience, majority of business owners tend to take the salary of circa roughly like £12,000 or thereabouts,
Yeah,
middle rate threshold for dividends, which gives them an income of 50k. That mixture of salary and dividends tends to be the most tax efficient. But then at that moment in time, they are faced with, should I say, how do I kind of pay myself more, or what can I do to make myself more tax efficient when they move into the higher income tax brackets? So what we try to advocate is, like, irrespective of how you remunerate yourself, you're still dependent on your health to generate that income. If you don't turn up for work, your company ceases to trade and you cease to receive any payments. And therefore, everything downstream of that will encounter problems. That doesn't need to be the case when your business can set up a tax efficient insurance policy, be it life insurance through the company known as Relevant Life, critical illness insurance through the business known as Key Persons, or income protection known as executive income protection. And all of those areas in a moment we'll touch on, but they can all formulate part of a safety net which is there to protect you, your business, and obviously your welfare.
100%. We see it a lot. Directors paying themselves, as you say, the really efficient way, which is great, but it usually means that there's no safety net that's then built in. As you say, there's no sick pay. And if the business then slows down, or, you do have, critical illness or whatever, then that personal income can dry up very quickly.
Hmm.
Um, so it's not from like a scaremongering side of things, but I sort of put my risk mitigation hat on, and um, it matters so much for directors in that sense.
Yeah, the buzzword or the official word is business continuity and succession planning. And really that's what it is look at where the risks are and what we can do to mitigate those risks. And ideally speaking, do that with something which is tax efficient and obviously is an allowable company expense from HMRC standpoint. And that's where, when you start to annualize the premiums and look at how much it would cost you personally, and you can divert that cost to your business, it becomes a no-brainer. And I think, yeah, again, we'll talk about that in a moment.
No, fantastic. Let's pause for a second then. Let's do a quick poll. So if you couldn't work for the next 3 months, how are you actually going to feel about your personal income? There's no right or wrong answer here. Just go with your gut. So if you couldn't work for the next 3 months, how are you going to feel? So nobody at the moment has put, okay, let's see how it goes. This is really interesting.
Hmm.
So one of you have said I would be fine. Uh, yeah, we've all answered. Let's just end the poll. So I'm just going to share it with you all. One of you said I would be fine, which is fantastic. Three of you said I would probably be okay. I don't love the word probably because we just sort of hope. And then another 20% said I would be a bit scared. Sorry, a bit stressed.
Is there,
Which,
sorry to interrupt there, Lucy, is there a way where we can maybe extend that period of time to potentially a longer period? For example, if you were to say, take away 2 to 3 months, but maybe change it to a year to 2 years, how that
wow,
then change things?
that would change things a lot. I think a lot of people would be in that I would be very stressed
Yeah,
side of things.
yeah.
Um,
There
because
is
a lot of
rationality.
us, yeah, like 60%, I think a lot of us would probably be okay. Um, but yeah, as the time extends, you are going to be stressed. It's inevitable, and you would become incredibly stressed. Finances is one of those things that it's a very stressful thing. Um, but yeah, let's just go back. So directors might take money out. Maybe they take a salary and dividends, maybe even a pension. What parts can the income protection actually cover?
Sure. So there's two elements to income protection. You can run it through the limited company, either as a lump sum payment known as critical illness payouts, or you can also have what's a strictly income protection plan, which is ultimately a percentage of your remuneration. And that can include salary, dividends, it can include pension contributions as well. And ultimately, there's a choice of what you can look to have in place. Normally, it's referred to as executive income protection. 80% of income is typically available for you to protect. It is subject to what's known as a deferred or a waiting period, and that can often dovetail with that 2 to 3 months we were just indicating there. Most people, as we've just seen, tend to have a contingency plan in place. If you're a contractor, it's very familiar territory because you might be in and out of contract running a PSC. If you are a limited company director, it's inevitable you may wish to kind of have some sort of savings in place for a period of absence in the event there's a downturn with like your work and trading and turnover. I think ultimately a lot of us are very familiar with the need to have something squirreled away in the event of problems in terms of continuity of business and income.
Yeah.
That tends to kind of reflect in the poll we've had there, which is 2 to 3 months worth of cover in place. Extend that out 6 months, 12 months, a year, 2 years, it becomes very difficult. And if you look at some of the major illnesses which we're all susceptible to, cancers, heart attacks, stroke, diabetes, they tend to be some of the major illnesses and problems facing UK population and global populations for that matter as well. You'll notice that the recovery time for those can be indefinite in some examples, quite prolonged, maybe 6 months to a year to 2 years. I think all of us at some point in our lives have had exposure to friends or family, people we know who had a period of ill health and how badly that can impact them. And that's magnified tenfold when you run your own business because the buck stops with you. And this is why we're talking about this particular subject. And ultimately, as I just mentioned there, your income protection plan could be dovetailed to start at the point where you feel that your savings would essentially start to dry up, and therefore what alters the premium how much you pay is how much you insure yourself for, how long you insure the payout for to continue for, and ultimately at what point it kicks in. So it's very familiar. I would say from my experience, 2 to 3 months tends to be the time by which or in which the policy begins, because your savings have reached the end of or the limit of what they were available to do in the first place.
Yeah, so good that we're keeping that money aside. What if somebody actually takes a £12,000 salary, say, and then the rest is dividends? Does that actually make a difference to the policy? Does it usually protect that?
It's so with insurance companies, they're able to utilize your basic tax return. So you can demonstrate that from your SA 302s and your tax year overviews. If there's a husband or wife situation, or in terms of a family operating a business, and there may be one particular breadwinner, either the husband or the wife, insurance companies can actually utilize both husband and wife's salary and dividends together to provide a larger remuneration in terms of the benefit being received. It's quite common where there is that situation for both parties to be taking salary and dividends of £50,000, and therefore the total combined income is £100,000. So that's often done to structure things more tax efficiently for the organisation. And what you're able to do, as long as you are married, civil partnership, you are able to utilise both of those levels of income to remunerate yourself at 80% of the value. So instead of getting 80% of 50,000 total income, you get 80% of 100,000.
That's fantastic. What are insurers actually looking at to decide the benefit level for a director, though? Anyone who doesn't understand.
So the benefit is simply capped at 80% typically. Your choices are, as I mentioned earlier on, how much of that 80% you choose to allocate in terms of the benefit payout, when it kicks in, how long it pays for, and ultimately your choice of which insurance company you go to. There are plenty of providers out there who will allow you to set this up as an executive income protection plan, and that has added tax advantages for you and the business. But ultimately, as well, should you wish to, you can also run it on a personal basis too. So there is that choice there. I would say, in terms of this tax standpoint, and removing as many costs from your personal bank account and allocating that to your business in a tax efficient way, it makes full sense to kind of run it through your business as an executive income protection plan. But ultimately, everybody's different. Choice is yours, and as part of the process of navigating those decisions, you're always welcome to speak to advisors such as the team at Broadbench or Lucy at Simplex to get more of a guided approach as such.
And I guess from your side of things, Tom, do you see the dividends fluctuating and that causing a problem?
Yeah, that's one small element of the remuneration process, which you do have to be mindful of when it comes to executive income protection. We all are aware that from year to year, turnover, dividends, income, taxation, it changes. And it's quite common for business owners to find themselves in either a better or worse position in terms of their taxable income. So
Yeah,
imagine you've earned £100,000 for 1 year, the next year you've earned 80,000, but you've based your policy on the previous year of 100k. If you
yeah,
do come to claim and you are not able to demonstrate the same level of income as you had previously, the insurance company will not pay you what you've expected because it's not in line with what you can demonstrate at the point of claim. So
yeah,
there's a bit
makes
more
sense.
complexity in how these policies work, and it's often the devil is in the detail. As long as people have their expectation managed in terms of how that is structured and what they need to do to keep up, I guess, the maintenance of that plan, there won't be any problems. But it's when people assume something's going to be received, when situations behind the scene have changed, that there
Yeah.
comes problems. And ultimately, what we endeavour to do at Broadbench is do regular reviews of our clients, promote that education, and help people understand the process of how to kind of get the best out of this type of policy.
Yeah. Now I can imagine where sort of being consistent can be really helpful
Hmm.
because from my side, when income is then taken irregularly or not recorded properly, even worse, it's much easier to then be able to show actually, what you're making and rely on that.
Indeed.
But when things are messy or they're changing month to month, I can imagine that it could get really difficult to understand what the level of cover is. So yeah, from an accountancy side of things, it's just making things as clear as possible and making your life easier at the end of the day, Tom.
Yeah, indeed. Thank you.
Fantastic. So, should the director pay for the policy personally, or can the company pay?
Okay, so there are three plans. Well, there's actually four particular types of cover which you could look to run through your business. I'll run you through each of those individually. Life
Yeah,
insurance, known as relevant life insurance, is simply a director's benefit. It's available to directors of a company, employees of a company, tends to be available. We recommend up to sort of businesses of no more than about 12 people because it's advantageous for them in terms of tax efficiency without the need to go into a group scheme. So that's life insurance on company expenses, known as relevant life cover. You then have a critical illness policy that can be run through your company, known as key persons insurance, and it pays out in exactly the same way as you'd imagine a critical illness plan. Same for the relevant life. The income protection we've just touched on, known as executive income protection, and you can run additionally private healthcare through your company. The first three, relevant life, critical illness, and executive income protection, have certain tax advantages. The first being is that you don't pay for it out your own post-tax income, i.e., we looked at cost of insurance policy, £50 a year, £50 a month, excuse me, £600 a year, easily into 10, 20 years, that's a lot of money you can suddenly be paying. You also, in order to receive that £50 net, your company's got to pay you a gross figure, which is larger than that. Simply put, we can divert the full cost of that insurance from your personal bank account to your business. You're suddenly given £50 back in your pocket to enjoy and spend on something more favourable than insurance, whatever that may be. Your company then pays for that £50 policy at a cost which is exactly the same. There's no difference in premium from the relevant life plan to a personal policy, But when the company pays, it's an allowable business expense. So you're going to be able to claim a minimum of 19% tax relief. So essentially what your accountant would then do is take the annualized cost of that and utilize that full expense to reduce your corporation tax bill. Added advantages as well, not classed as a P11D benefit for the relevant life. And in the event you were to pass away, the money is paid to your family free of tax via a discretionary trust. And that discretionary trust ring-fences the benefit from taxation, it avoids the probate process, and ensures that your family receives that money immediately to pay off things such as mortgages, to replace loss of income, to look after family and children. So it's a very tax efficient method of expensing the full cost of your life insurance to your business and not paying for it out of your own bank account. Absolute no-brainer for nearly all business owners. Critical illness cover is structured the same way, but it's slightly different in terms of who it pays. Ultimately, the critical illness policy there, known as key persons plans, are a cost which is tax efficient for the company because it's an allowable business expense. Yet again, it's not classed as a benefit in kind, because in the event of a claim scenario, the money doesn't necessarily come to you, it comes to the business because it's there to protect the turnover and the value that that individual brings to the business. Ultimately, it would be payable on the diagnosis of, in some examples, up to 132 to 150 conditions can be covered these days. And the idea here is that on the diagnosis of that illness, the company would be remunerated for the full value of the sum assured, say it's proportionate to turnover, and that happens to be £100,000. Director gets ill, £100,000 is claimed on by the insurance policy. That money is paid to the company. At that moment in time, the director may not be able to work in the same capacity as they have done, and therefore needs to take a year to 2 years out of work with surgery, chemotherapy, rehabilitation. The company has enough money because it's been remunerated by the insurance company, and that director can still continue to pay salary, dividends, the expense of running the business without needing to close the company at that time. The money is always paid into the business free of tax, but essentially what you've done is replace client income from a critical illness policy payout income, and it's treated and classed as a traded receipt and therefore forms part of your turnover, and ultimately is there in the way that your normal income has been to support your turnover and is taxed accordingly. The good thing for you is that if you are able to return to work immediately or wish to work through that illness, you can do so. You're not obliged to stop working to receive that income. You could have critical illness policy payout and continue to work. I've had clients who've had a heart attack and gone back to work 3 months later. I've had people who've been out of work for 2 years, if not longer, because they've been debilitated by that illness. The choice is yours. The payout is made on the diagnosis. And the last one, income protection, as we mentioned earlier on, it's there to pay the employee salary whilst they're unable to work. Yet again, not classed as a benefit in kind, allowable company expense, money's paid into the company free of tax. It does form part of turnover, but it allows the employee to receive, the director of the employee to receive their remuneration. So a lot of directors tend to run these policies all together. Life insurance for the company, critical illness, income protection. Life insurance protects the family and mortgage. Critical illness cover, known as key persons, protects the turnover. Executive income protection protects their salary and dividends. The choice is yours how you manage it. The last one in there, private healthcare. Great little opportunity to run it through your business should you wish to. However, it is classed as benefit in kind. It does have an alteration on your tax return. But that being said, the premiums are typically slightly cheaper than that of a policy being paid for personally, because it's intended for company use and multiple employees, so it needs to be more favorably priced. So all of those together are a very good way of protecting your health, mitigating risks, and ensuring in the worst case scenario, everything continues in the same way and in the same manner. And also, it's tax efficient. Happy days.
Love the tax efficient side of things. So from your side, what happens tax-wise to the payout of each of these routes?
So as mentioned, the life insurance policy, you set up the trustees and the beneficiaries to that plan. That might be partner, family friend, whoever you wish it to be, has to be over the age of 18 in terms of a trustee. The beneficiaries via the discretionary trust are typically family members, husband and wife, children, anyone beneficially entitled to your estate. That money is paid via the discretionary trust free of tax. So Relevant Life has its very own different mechanism in terms of how it's paid, in that the other two, critical illness and income protection, are paid into the company, but with relevant life, it pays to your family. So it is simply life insurance on company expenses, and it's structured in the same way in that it's a lump sum payout to your family, and that can be nearly any choice within reason, and ultimately that amount of money can be there to replace loss of income, pay off mortgages. Maximum term for that plan is to age 75. Majority of our clients tend to structure it to age 70 because by that time they've ideally completed their work life and retired. Mortgages, which they have had, have been paid off, and ultimately maybe children as well have kind of flown the nest. So typically speaking, most directors run a policy to the age of 70 or 75, depending on their outlook. And that level of income in terms of value payout is there to protect the liabilities and their salaries to which their family become kind of accustomed to. So it's a very great, fantastic mechanism to protect all of those elements, and ultimately is highly tax efficient. A nice little nuance: if you ever do close your limited company, you can convert that policy from being paid by your business to being paid by you personally without any loss of benefits, and ultimately you can convert it from being paid by one business to another. So it's fully portable as well.
That's really, really helpful, Tom. And just so that the viewers understand, what would you say is the simple sort of trade-off between the two options of paying personally or business?
Um, I don't think that there is really as such a trade-off in that there's very, very few times where expensing the full cost of these items to your company doesn't make sense, because ultimately, if you put a relevant life policy next to a life insurance plan paid by you personally, the tax advantages are significantly improved when your business is paying for it. There is only kind of rare times whereby someone may have had a plan which is set up 20 years ago, they've been paying for it and it costs them £10 a month and it gives them a good level of cover. In those examples, it doesn't make sense to cancel that plan and pay for a higher premium because you're older and more expensive to be insured. But what you can look to do is take on an additional benefit at that time to bolster your existing protection planning for your limited company. And what shapes the premium is yet again your age application, your health status, how much you insure yourself for, and for how long. So some people may have got a policy when they were younger, put it in place, and thought to themselves, can I just simply move that into the business? Sadly, you can't, because it has to be a qualifying relevant life plan. But you can take a top up to maybe look after other things which the original plan doesn't cater for. So it gives people an extra level of cover, or it could be, simply diverting a cost from being paid personally to the business if it makes financial sense to do so with all the tax treatment as such.
Fantastic. So if a director's got nothing in place at all, in what order would you say that they should look at these? Because you've mentioned obviously about the income protection, life cover, critical illness, all of this. But yeah, where do directors begin?
Difficult one. Everybody's different. I think you'd have to look at circumstances to give a fair answer to that. Let's make an example. A director with a family and children and mortgage liabilities. I would say the two things that they want to consider is the relevant life insurance and either the critical illness and the income protection plan. Why? If there's responsibilities to manage liabilities such as debts, replace income, look after kids, if anything happens to you, you pass away, that can create a lot of problems for your family, and therefore the tax efficient payout of a relevant life plan via discretionary trust takes care of all of those outstanding liabilities, replaces income, and provides that financial safety net in the event that you were to pass away, or for that matter, be diagnosed with a terminal illness which will result in your death. That's certainly one big important thing for most people to cover, just the idea of leaving families left behind with tough choices to make and debts to be repaid. It's a very common thing for people to wish to put in place life insurance. Equally, and probably more importantly, in my opinion, is the income protection side of things, in that most people, it's an obvious choice for life insurance, but people tend to neglect their health in terms of the value it brings to them in terms of day-to-day productivity. And it's the in terms of statistics, you're far more likely to get critically ill than you are to pass away. I believe the statistics are less than 3% of non-smokers, men and women, will die before the age of 65, compared to the prevailing rate of critical illness, where 1 in 3 people, if not more than that these days, will get critically ill. And those, yet again, we mentioned cancers, heart attacks, strokes, are the most prevalent illnesses which we can all encounter. And often, if you look at the time periods to recover from those, if you do, can be 6 months, 12 months, 2 years. Some people are left incapacitated for a prolonged period of time. Critical illnesses such as blindness or paralysis or um, other illnesses which can really debilitate you for an extended period of time, can create a massive problem for you in terms of your ability to conduct and run your business in the way you have done. And as much as we can't solve all your problems by providing a lump sum payout for millions of pounds, we can certainly do some good work in terms of creating a contingency for a year or two to give you a chance to get back onto your feet and recover as best you can. If not 100% recovered, allow yourself some time to create a contingency plan and not have to face hard decisions when it comes to running a business when you're sick and ill, eating into savings which you pay tax on, and looking at all alternative options. So it just gives you choice, it buys you time, and in this particular example, can be run for your company in a tax efficient manner.
So if a director has nothing in place, would you even look at sort of the health insurance side of things, or would
I
you
think,
more be verging
yeah,
towards those income protections?
I, I think the private healthcare is a really nice additional benefit to include. A lot of the time I speak to clients about this sort of thing, we do have the NHS in the UK, which for for us, it is one of those services which we do take for granted a little bit, and is fantastic when you come to use it. It does have its drawbacks and issues. We're all aware of that, but nonetheless, that if you do fall upon ill health, you do have the NHS to look after you. That being said, I would, if you can look to offer private healthcare, it certainly is an additional benefit you can bring into the mix. But I personally feel that the life insurance and the income protection is really valuable, because with an income protection payout or a critical illness policy payout, you could utilize that money to pay for private treatment if you needed it, or to kind of give yourself the financial support whilst you're going through an absence of income. What's more important, to have access to private healthcare for 2 years while you're going through treatment, or would you want to have continuity of income to pay for your mortgage, to look after yourself in terms of living costs? I would say most people would rather have the comfort of knowing that their mortgage and their income is secure, rather than have the benefit of getting private treatment when they do have the NHS. So I would say, in order of preference, life insurance, no brainer, through the business, form of income protection as critical illness or key persons insurance, and income protection is the executive income protection plan, as I mentioned. Then the added benefit, private healthcare. That tends to be the way most people structure things.
Yeah, and what I'm hearing a lot from you, Tom, is around a lot around purpose and sort of what are we aiming to do? You know, if you're aiming to look after your family, then you might go down one route. But if you're actually aiming to protect the business, then you might go down a different route. So I guess it's just being clear on the reason why you want to set
Yeah,
things up, and then sort of going from there, you know.
yeah, I would totally agree on that. I think everybody's different, but we can all agree that we get into business to make things better for ourselves, for our families, to have the choice to how we want to play, our work life and careers. And the only thing which we don't necessarily have a choice in is our health, especially if you are predisposed to a hereditary illness or you have an accident. We can do our very best to be fit and healthy, but sometimes with the best will in the world, things happen to us, and we have to ensure that there is a continuity plan, a succession plan in place to protect ourselves in those scenarios. And a lot of people simply don't recognise the importance of that until a major event happens when it comes to their health. And strangely enough, I often get people contacting me for insurance help at the point where they've been through a major risk issue
Yeah,
with it,
I can
and they,
imagine.
yeah, and they've appreciated how important it is to then kind of get something in place. The irony being that because they've had that illness, it's very difficult to get insurance once you've already had a heart attack or you've become, you've had a diabetic diagnosis or something along those lines. It really creates a lot of problems. So my best advice is get ahead of the problem, create a solution, do it tax efficiently, evaluate what's important for you and your family and your business, and set it up and forget it. That's the best way. Find the best insurance provider with the best opportunity to claims for the right amount of money, for the right, in terms of the payout, the right amount of time, and let it run in the background and hope that you don't need it. But if you do, you've got it there to look after you.
Yeah, I mean, when you think about it as well, the last thing that you need if you're unwell is to then have that financial
Yeah,
stress. That's
of
not going to
course.
help anything. So
Yeah,
there's so
yeah.
many elements to it, isn't
Yeah.
there?
As a business owner, in the 15 years I've run Broadbench, I've had two people pass away whilst working with my company, and two people get critically ill. And each of those scenarios have created a payout for me and my family and for my company. So I know firsthand the value that these policies create, not only to the business, but to family members. And speaking from firsthand experience, I can only advocate the benefit of them.
Yeah, it takes such a pressure off as well, I can imagine. It's a
Yeah,
terrible situation and you do need that level of something that's going to take that stress off, whether it is income protection or any of the others.
indeed.
So just going back to thinking about the director themselves, how should a director realistically um, choose a realistic benefit?
Speak to me.
Your client every month.
Okay, so I think it, it is bespoke. Everybody's different. Everyone has varying degrees of risk profile. Everyone has varying degrees of kind of liabilities in terms of their financial situation, how much money they're earning, how many children they have, partners, the lifestyle that they live, the responsibility to the business. So it is very much a bespoke approach that I would take when it comes to helping keep people make an informed decision. Ultimately, you just need to kind of evaluate where the risk lies and what your attitude to that risk is. I would say the most common kind of way of establishing what you may wish to insure with life cover, typically debts and what you're earning and what it would cost to look after your family if you were to pass away prematurely, what it would cost to replace, to pay off, or should I say, the mortgage debt. So typically replacement of income, paying off debts, looking after family, children, that sort of thing is what you would use to evaluate the sum assured in the period of time for the life insurance. When it comes
Yeah,
to the
so
business,
everything that you're personally, all of your outgoings put together, I guess.
yeah, indeed, yeah, I think that's a very kind of familiar sort of thought process for people to undertake when it comes to this sort of thing. With respect to the critical illness element of it, it's very much about what value do you bring to your business. If you are, a solo business owner and you are 100% sort of responsible for the turnover to your company, it's very easy for you to make the valuation to say that if I'm out of work for 2 years and I'm bringing in £100,000 worth of income, and the average length of an illness of a serious nature for me to recover might be 2 years, it would be very simple for you to say, well, I need to have £200,000 worth of critical illness policy payout to replace that loss of turnover in the event I'm out of work. And from that, I can continue to pay salary, dividends, professional indemnity insurance, accountancy fees, tax bills, all of that is there kind of available for you in terms of that payout for you to then utilize for the continuity of your company. With the income protection, it's a bit more clear cut in that you can only get the 80% of your salary in dividends. So that choice is really determined by your income prior to the claim and ultimately setting up the policy. So I think, once again, it's just a choice,
Oh,
individual
we've
choice,
lost your camera, Tom.
how
Just a
you
sec.
structure that. Let me see if I can bring that back. Here we go. Sorry about that. So yeah, I hope that helps.
No, that's really helpful. I actually hear business owners all the time say, I am the business.
Yeah,
And I can imagine for you that is one of
Yeah,
those warning signs in your head.
of course.
Um,
Yeah,
because
100%.
yeah, if you are the business, you've got more of a risk if
Yeah.
anything happens to you. I don't think people think something could happen to you and it could all be taken
Yeah,
away, kind of thing.
especially if you're a contractor, you have a contract with your own client. You can't suddenly recruit someone else to do that work for you because it doesn't work like that. You have a
Yeah.
contract for services work for your client, and in the event that contract isn't fulfilled, your client stops paying you. And you can't just say, oh, I'll bring in Joe Bloggs to take my role and do that contract for me. It doesn't work. And it may be also be the case that you're highly skilled in what you do, and therefore you can't simply bring on someone else because the money that they generate for the company would pay for their salary and not also take care of yours and all the other costs. So this sort of protection planning is really fundamental to kind of ensuring that continuity, as mentioned earlier.
And is there like a waiting period? How do you then pick that period that fits around like a director's life?
Um, in terms of waiting periods, do you mean in terms of the income protection waiting period? That's personal preference. I think the poll demonstrated earlier on, most people have 3 months worth of savings and they're not concerned. I can deal with that, stretch it out to 6 months, to a year, to 2 years. Everyone starts, getting into serious problems at that moment in time. And you
Yeah.
don't want to be faced with financial difficulties, going through a particularly bad health scare, and the fallout from that in terms of treatment. It's already a stressful environment to be in, and you don't want to add in financial stress as well. That there's no reason for you to have to do that when you can take action and forward plan for those events.
Are there particular sort of mistakes, I guess, that you see directors make when they actually set the cover up? Or
Not so much mistakes, I would say. Some people simply don't necessarily get the right advice first time round. It, it is one of these sorts of things whereby you need to be very careful about the benefits you select and the choices available to you are fully understood,
yeah,
because you don't want to have your expectations set and find that you're not going to receive what you first had hoped. And I would say from experience that there are a lot of people out there who are quick to offer the advice, and I sometimes, with the business that we do, um, there'll be people who I speak to and I then speak to them again and say, I've got it sorted. And I'm like, how did you get it sorted so quickly when there's so many moving parts and elements of decision making for you to get right? And it happens overnight. And I've got this done. I'm like, wow, how does that even happen? It's, for me, the consultative approach, understanding how their business is set up, their remuneration, making them fully aware of the complexities of income protection planning, especially as we mentioned earlier with the change of remuneration. Now, what happens if I'm a contractor, I'm outside of contract when I come to claim? Will the insurance company pay out? And what happens if I change role? What happens if my occupation class changes? There's so many varying factors which people just don't understand, that I find it quite difficult in some examples to understand how people could get things over the finishing line so quickly. That
yeah.
being said, we're here to provide that education, demystify, the whole kind of complexities of their insurance choices, and make sure that our clients get the right advice first time around. Because insurance is only as good as when you come to claim, and if it's not right from the outset, when you do come to claim, you're going to be disappointed, and that for me is not a nice place to be in. As I mentioned, having been on the receiving end of a payout on a number of scenarios, it's so valuable when you receive the funds. I couldn't begin to imagine how distressing it would be expecting some money and then not receiving it in the event it's not being done correctly.
Yeah, I couldn't agree more. It's one of those things you do need an expert to make sure that it's sorted. And as you say, why would you risk when I am in that situation? Now I'm having to deal with, potentially problems. So I
Indeed.
always see you should always go to an expert. When you were saying that, it makes me think of people submitting their tax returns wrong and then coming to me, and then there's like,
Yeah.
oh, can you look at the last 2 years because there's issues? It's one of
Yeah.
those things. It's going to be worse if we don't get it right the first time. And actually, from your side, if you get it right, this can protect you and it will
Yeah.
protect you in the bad times. And you're, from what I can see, very understanding of of, sitting down and thinking realistically what this would look like. Um, it's just such an important topic. It's not talked
Indeed,
about
yeah.
enough.
Yeah, I know. Until it's too late, often people, as we
Yeah.
said earlier on,
And
are
when you
very.
said somebody came to you last minute, I'm not surprised, but it
Yeah,
must be mad from your side and really difficult because there's very little that you can do at that point.
indeed, yeah. So it's good to get it set up when you
Spread the
set the business.
word.
Yeah,
Yeah.
yeah, indeed. Provide that education and help people make that informed decision correctly.
I'm very conscious of time. Just wanted to do one last poll before we move on to pulling all of this together. So, on your screens in a second, you will see a poll coming up. So, we're thinking about how you really can, how you actually pay yourself, and does your current protection line up with that or not? So, I'll give you a few seconds to answer the question in front of you. So, does your current protection line up with how you actually pay yourself? So it's yes, it matches well. I think so, but I'm not totally sure. No, probably not. Or I don't have anything in place. I'll just give you a couple more seconds. Just go with your gut. First thing that you think. Okay, I'm going to share the results. So 25% said that it matches well. 50% said no, probably not. And another 25% said I don't have anything in place. Does that surprise you, Tom?
I think that's consistent with what we see. Most people just aren't aware of how this can be structured and doing it right. And this is the whole nature of what we're trying to achieve today is to spread the word and help people understand what their choices are. Um, and I think getting that knowledge, applying it in practical senses with your own business and situation is a really worthwhile process to undertake, and only needs to be done once. Once you've got it set up, ideally speaking, as I mentioned, you can set and forget. If there are changes to the situation, we can always evaluate those and make sure that everything's kind of reflects those changes with your business. And that's why we've been in business for 15 years and continue to grow and get the reviews on Trustpilot that we do. So I'm hoping that off the back of today's meeting, that if anyone does want to reach out, they know that we're very much on hand to help and evaluate where they are with things and do our best to create a solution for them in the worst case scenario.
So, for the directors here, sat here in the call on YouTube Live or just listening to the recording back, if you had to tell them or give them one action to take this week, what would it be, Tom? Cool with you.
There was maybe that sort of thought process. I would love anyone who would like to take a deeper dive into their own personal circumstances to feel free to reach out. The team here at Broadbench and obviously at Simplex, we're very much happy to assist you with your inquiries. We can book a welcome call. We can share ideas in 25 minutes, half an hour, as long as you've got. And I'm very, very confident that we can help you evaluate your choices and steer you in the right direction. And if you feel that there's a fit and you want to get something sorted, we'll take you through that process. So feel free to reach out. It would be a pleasure to have all of you. If you need to double check what you've got, you want to look at the tax advantages, all of that is available. It's as much or as you feel is appropriate.
And it just shows when you pay yourself correctly and when you match that with the protection side of things, things can be so much clearer. It's usually about reviewing what's going on right now, what are you doing, and how we can make those small adjustments rather than this big change, Tom, of oh, I need all of this stuff. Actually,
Yeah,
it's just small tweaks to go in the right direction and sort of protect yourself from your side, but also to be organized and prepared.
yeah,
From a tax point of view, it it affects protection, but it affects so many other areas. And I'm always speaking to business owners about how, what the goal is, what our purpose is, what are we trying to achieve. So from your side, it's what do you want from that level of protection? Is it to protect your family, etc.? From my side, it's are you getting a mortgage? Are you planning on moving? Are you planning on, all these different things are at play. Um,
yeah.
so We're going to move on to the Q&A now. So please do put your questions into the chat. We're just going to take a few minutes. I know we're running close to time, Tom. Are you okay to
Yeah,
catch?
indeed. Yeah. If anyone has any questions, feel free to ask away. Very happy to field that. If you do have any.
So please do put them in the chat if we have any. Let's have a look.
We may have
So
been comprehensive enough to answer all your questions in our meeting. You never know.
then we will take it. So we've had a question that came in prior. Um, Somebody was saying about I take a low salary and high dividends. What should I fix first?
You can fix both. That's the thing. Take the mixture of salary and dividends, and that can be utilized to verify your income, and 80% of that. Easy.
Amazing. Another person has put, how often should I review the cover of if profits change?
Um, I would say it would make sense to do that every 2 years, potentially. Circumstances changing, it's quite circumstantial, and ultimately you can look to do that as and when you feel appropriate. But as a standard, we always reach out to our clients every 2 years to help with that. I can see here that Josie said she'd like to have a meeting. Be a pleasure to arrange a meeting with you, Josie. I can ask one of my secretary to email you a link to my diary and get booked in with either myself or the team for that initial welcome call. Be a pleasure to help.
Fantastic. And let's just take the last one. What's the quickest way to check if my cover matches my income? Someone said.
Speak me. Easy.
Nice and
Yeah,
simple.
honestly, the best way to make that assessment is just to jump on a call. Like, we're always free to help. It doesn't take very long. Send us an email, WhatsApp, carrier pigeon. I don't mind. Just let us know, and we'll get back to you immediately. So, I think the thing is that I try to promote conversation. I do my very best to educate and inform. And whenever it comes to these sorts of things, always feel free to fire questions to us, because we'll get back to you straight away. So yeah, don't be scared, and just if there's any concerns, better to check than to get it wrong and in a worst case scenario, not get what you expect.
And you can always book in a call with myself, and you'll see the links in the chat. But thank you all so much for joining us today. Hopefully, this has helped things click a little bit around how that you pay yourself and protecting your income, and why you need to line both of those things up. So,
Yeah,
to say, if you want to find out a little bit more about us, we're Simplex Accounting. You can find out us on our website or over on LinkedIn. We're always sharing practical stuff for business owners. If you want to learn more about protection or check any of that, as I say, go and check out Tom. Um, he makes everything make sense. So you can find Tom and the team at Broadbench online as well. And we're going to also send out some follow-up links after this, so you'll receive a quick summary. And don't worry, you will have a recording of this as well, so you don't need to remember everything.
yeah,
But yeah, hopefully that's helped. People can go back to this. And thank you again for everyone for coming along. And thank you so much, Tom, for your time. And
yeah. My pleasure, and thank you, Lucy and Ella, for hosting this, putting it on. As mentioned, everybody, we can work out the tax savings. We can make sure you've got the most up-to-date policy in terms of definitions of benefits. We can review what you've got in place if you're concerned with that. Just feel free to reach out. There is always an opportunity to help and see if we can improve things or make sure you've got the very best in class when it comes to your plan. Definitions of cover change all the time, and insurance companies are always innovating, should I say. So it is worthwhile checking in from time to time to make sure you're getting the very best in class. So thank you very much, everybody. I hope that was informative, and I look forward to speaking with you all in due course.
thank you all so much. Take care. Bye.
Thank you. Cheers. All the best. Bye-bye.